Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian equities drop with bonds extending a global sell-off as traders weigh a slower pace of US interest rate cuts. Secretary of State Antony Blinken makes an 11th visit to the Middle East as the US renews its push for a ceasefire between Israel and Iran-backed militants. Plus, clear skies for SAP as cloud revenues jump 25%. We're going to speak with the CFO of Europe's biggest software company later this hour. So we check these markets with a focus as well on what's happening in fixed income with that global sell-off in bond markets from Australia to New Zealand to the US, of course, and we'll reflect on the US 10-year shortly. But in terms of the equity market read-through then, you're looking lower on the back of the futures. European futures currently, in fact, up 0.1%, I should say, were down across the Asian markets, and you were off yesterday in European markets by about 0.2%. A little bit of modest selling in US stocks as well, but that's after that record that was pushed through. Again, European futures pointing modestly higher, waiting for a few more catalysts, it seems, and then Fed speakers as well, painting a bit of an uncertain picture, but certainly for some, building out expectations that maybe this is a Fed that will go slower and less aggressively on cuts going forward. FTSE 100 futures currently down 0.2%. S&P futures off by 0.2 as well. Nasdaq futures looking to lose around 68 points, pointing lower by 0.3%. Let's flip the board and look cross-asset because, yes, that bond sell-off is pronounced. It's moderated to some extent in the session today, 4.03 at the front end on the 2-year, but 50 basis points move higher over the last 30 days at the front end, currently back above 4% on the 2-year. Part of that, again, down to FOMC speak, but also it seems expectations that maybe Trump is leading in this US election come November the 5th. Japanese yen under pressure, 150.84 currently. You have an election as well out of Japan over the weekend, so expectations maybe that coalition could become a little weaker for the Prime Minister. Brent 73.96, currently down 0.4% on oil after the gains yesterday. Gold, further gains for the yellow metal, up 0.5% so far in the session, trading at 2,734. Let's cross over to Singapore right now. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, a lot happening today. I'm going to do my best to try to break it down for you. What you need to know is against the backdrop of those higher U.S. yields, it is proving to be very uncomfortable for Asia equities. The region's benchmark is down for a second day to the lowest level in about a month, but also tying in some of these micro or the corporate developments because the macro is influencing. You can see here how HSBC, for one, is, under pressure to trim costs, given the pressure on margins, and it is announcing how it's streamlining its business and combining both its global commercial and investment banking arms. And then you take a look at what we're seeing on the trading debut of Hyundai Motor India. And of course, after a record IPO, $3.3 billion raised as of last week, we were watching out for how it would fare on the first day of trading. So far, it looks like a really lukewarm reception. So it looks like those animal spirits returning to the IPO market in the Asia Pacific, or in India at least, that's going to take a while more until we actually see that firming up. But that is what we're seeing in terms of stocks. Let's flip the board because against the backdrop of those higher yields, of course, the subtext is the trimming of those Fed rate cut bets. And we're not just seeing that in relation to the Federal Reserve. It's also about the Reserve Bank of Australia. Just think about earlier this week how one official left the door open for a late cycle hike. And you see that reaction still in this Australia 10-year. The Aussie is gaining ground on a day where EM Asia currencies are getting really hard hit. Let's flip the board, take a closer look at that correlation between Asia stocks and US yields. If we do have a path towards 5% on the 10-year, it could prove to be a lot more pain for Asia equities. That's something to consider on a day where we're seeing selling in Asia stocks overall, Tom.
OK, Avril Hong with a check on the Asian markets, joining us out of Singapore. We'll stay on the theme around a potential 5% yield on the US 10-year because bonds are extending that sell-off, that global sell-off, as we mentioned, as investors consider cooling expectations of US interest rate cuts for the rest of the year. San Francisco Fed President Mary Daly says she does not see reasons, though, to stop cutting rates, while other Fed officials favour a slower pace.
So far, I haven't seen any information that would suggest we wouldn't continue to reduce the interest rate. This is a very tight interest rate for an economy that already is on a path to 2% inflation. And I don't want to see the labor market slow further.
OK, for more on these bond markets, let's bring in Bloomberg's Valerie Teitel. Valerie, was it Fed speak that moved these markets yesterday, or was it election risks out of the US?
Look, many people, Tom, scratching their heads over what exactly was the catalyst for this bruising session for not just Treasury market, but for the global bond market. Some are saying it could be led more by the election fears, the fears that if we get a sweep either way, Democrats or Republicans, we are headed for more fiscal spending and more Treasury supply. It's interesting to note that the bruising day in the Treasury market is extending in the Asia session. Yields are higher by nearly 2 basis points in the 10-year sector on the Treasury curve. But let's flip the board. I want to talk a little bit more about this fears of fiscal supply and essentially what the market is telling us by this steepening of the curve, that sell-off led by the long end, that we are more jittery about the prospect of a bigger U.S. deficit, of more Treasury supply that the market has to digest. We've seen term premium jump recently on Treasury yields, and I just want to make us take a step back and think about what happened last fall. This was when the U.S. Treasury announced bigger auction sizes, saying that the U.S. government had to borrow more, so they had to increase auction sizes at every jumbo auction. We are seeing the grumblings of a similar move in that kind of term premium.
Talk to us about the European bond markets then. How did they shape up yesterday on the back of the European data, but also expectations that maybe this is a Fed that's going to be less aggressive in terms of cutting?
Yeah, it was a painful day in Europe. Again, no real clear catalyst. There was no data, nothing really to spark this other than that move in the Treasury market. What really caught my eye was this move in Italian 10-year yields. A 15 basis point move, Tom. That is a surprising move for the BTPs. And if you flip on to my next chart, we can take a look at how that was the second biggest move this year. It comes second to the move that we saw earlier in April. And that was a hot labor report that caused that move. This move yesterday was quite similar in the Italian bond market, but again, on no real clear catalyst, makes us think that the market perhaps is getting even more jittery about this election coming up.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. We'll continue to monitor because European bonds, when they start trading as well, with a focus on BTPs, and I wonder to what extent the budget in Italy is a factor there as well for investors. Later today, we're going to have an exclusive interview with ECB President Christine Lagarde, by the way. Do not miss that conversation. 3 p.m. UK time with Christine Lagarde. Now, to the Middle East, where Lebanon's Hezbollah says it fired missiles targeting Tel Aviv suburbs and a naval military site. For more, our reporter in Jerusalem, Dan Williams, joins me with the latest. Dan, what do we know at this point then about this latest Hezbollah attack?
Well, good morning. What we know is that as we speak, hundreds of thousands of people in Tel Aviv, just an hour's drive away from where I am, are in bomb shelters. This is a result of a Hezbollah salvo at Israel's coastal metropolis, its commercial capital. I'm not aware of any significant damage or casualties at this point, but nonetheless, this is a early daily display that Hezbollah retains fighting capacity, despite really having taken a drubbing from Israel over the past 5 or 6 weeks. And this comes as Antony Blinken, the top US diplomat, is on his way to the region for what would be his 11th attempt to broker a ceasefire on the back of Israeli gains in this multi-front war.
Yeah, and we're seeing right now live pictures, I believe live pictures of Beirut. We're talking, of course, about Hezbollah's most recent attack on Tel Aviv is the latest lines that crossed in the last few minutes, and you're giving us the update there. Dan, when it comes to that attempt then, as you say, the 11th visit by Secretary of State Antony Blinken to the region, presumably Israel will point to exactly this kind of attack for their rationale for continuing to press Hezbollah in Lebanon. What is the likelihood of any movement when it comes to peace talks?
That's anyone's guess, but I think the big difference in Blinken's trip now is he is coming after Israel really turned the tables successfully against Hezbollah, having overrun the Gaza Strip, really beaten down Hamas in Gaza militarily, although there are pockets of resistance in the north of that territory. We are potentially seeing Hezbollah husbanding what remains of its missiles in order to really launch these headline-grabbing attacks that actually don't cause that much damage relative to what it might have done prior to this Israeli counteroffensive in Lebanon. So he might come to the Israelis and say, take the win, which is a phrase apparently that the Biden administration is fond of. Take the win. Let's go for a regional ceasefire at some point. The Israelis have actually voiced cautious openness to that idea. There is war fatigue in Israel as elsewhere in the region. This war has gone on for more than a year now. But I think the Americans would really have to come up with an excellent deal that would somehow persuade Hamas to return all the hostages it still holds in the Gaza Strip and Hezbollah to back off verifiably from the Israeli border. For now, there is no sign of either group being open to that. The big question is where Iran stands on all this. Iran is the sponsor of those groups, of other groups in the region who have been attacking Israel over the last year. And I think the Iranians will be looking for a significant reprieve, perhaps a guaranteed reprieve from Israel's promised retaliation from the Iranian missile salvo of October 1st. We've been hearing the Israelis on a daily basis promising a significant retaliation for that. So in the absence of a guaranteed reprieve, that Israel will not do anything that would seriously jar Iran's stability or economy, I'm wondering if the Iranians would be on board with a package deal.
OK, a number of factors to consider as we continue to monitor Antony Blinken's latest visit to the region. Dan Williams in Jerusalem with that important update. Thank you very much indeed. Here's what else to be thinking about today, then. The BRICS summit begins in Russia, an attempt there by Vladimir Putin to show that, indeed, Russia is not maybe as isolated as some in the West would like. You have, of course, visitors coming through from China, India and South Africa, along with others, to that summit that starts officially today, 2:45 p.m. Meanwhile, UK time, we're going to hear from Andrew Bailey of the BOE. 2:45. Will he say anything that builds on expectations for a slightly more dovish move from the Bank of England? And aftermarket on the earnings front, we have L'Oreal, Vivendi sales and revenue as well. So some details there in terms of some of those European names on the earnings front, with a touch, of course, on the consumer from L'Oreal. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal, and the bond sell-off is front and centre in terms of the coverage on the Daybreak page today. Coming up, it's exactly 2 weeks until the US presidential election, with polls still very tight. We bring you the latest on the race for the White House. That is next. Plus, later in the programme, we're going to speak to the CFO of SAP after Europe's biggest software company posted a 25% increase in cloud revenue, thanks, at least in part, to AI. That conversation kicks off at 6:30 a.m. UK time. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. Now, it is the final stretch with just 2 weeks left in the US presidential election campaign. The polls still have Donald Trump and Kamala Harris almost neck and neck. The candidates are in full campaign blitz mode, competing for any votes among the few remaining undecideds. Bloomberg opening trade anchor Kriti Gupta follows all this for us, of course. Kriti, where do we stand? Certainly the financial markets seem to be increasingly betting at this point on a Trump victory.
It's a little bit of a turnaround from what we saw just 2 or 3 short months ago over the summer. This idea here that Kamala Harris had a lot of momentum when she first got the Democratic nomination, a lot of momentum on social media, actively choosing to do the non-traditional TV network interviews. And it worked for a little bit until it didn't. And it kind of pared back this idea that she's outperforming the former President Trump, the Republican candidate. This is important in the context of who is actually driving the votes here. And I think this is where you're seeing a presidential election unlike any other we've seen in the past because of who could make or break this election. Of course, the female vote matters a lot. Abortion is a high voting priority for a lot of these folks. You have the idea that, of course, Asian Americans could be making the difference, given that Kamala Harris is, in fact, half Asian American. So that is perhaps rallying that vote. Donald Trump, on the other hand, is making a very concentrated effort to some of the union workers. And I think this is interesting, given that he's tried to get the vote and the endorsement of what has been a traditionally democratic group of people, given kind of the Bernie Sanders legacy over trade unions in Detroit, in other parts of the world, Kentucky as well. And now he's trying to say, well, actually, I can create policies, tariffs even, that would actually help support this industry, support American manufacturing, and increase some of the wage stories that we know a lot of the labor movement in the states have been pushing for.
And he's been at Mackie D's as well, but has not yet committed to an increase in the minimum wage. So that's caused some controversy, the whole Mackie D's exposure, and Kamala Harris, whether she worked there or not. She says she did. There's no evidence that she did not. In terms of Europe's response, I mean, we've heard from Christine Lagarde in the past, the ECB, of course, and Emmanuel Macron, both being pretty straightforward in terms of their concerns about a Trump White House once again and how to revisit that for Europe. What are we hearing in terms of how Europe is girding for this possibility?
Well, it all comes through the lens of inflation, right? And that's where we're kind of seeing it priced into the market. You made the very crucial point about bond sell-off, for example, on the long end, really pricing in the idea that this reflationary environment could largely be a function of Donald Trump's policies. But it's not just the inflation story. You have defense as well, which, of course, we know he's been very vocal in the idea of not funding things like NATO. What that does, though, is create an incentive for a lot of European countries to then ramp up that kind of defense with very limited raw materials and raw budget. And when you have that kind of squeeze, it creates those inflationary challenges. That's where you're starting to see the squeeze, not to mention tariffs on things like steel, which are still kind of hanging over the United States and the European Union. There aren't tariffs imposed at the moment. They've been changed into quotas simply to kind of appease the European authorities until we get a new president. And that moves forward. You have things like liquor, beer, cheese, other imports coming out of Europe into American consumers, all potentially on the docket.
Liquor and cheese. Liquor. All right, brilliant. Thank you very much indeed. Bloomberg opinion. Bloomberg opening trade anchor Kriti Gupta, who is not adding her opinions to this reporting, doing a great job of keeping us up to speed on what is unfolding in that build-up, of course, to the November 5th vote in the US. Coming up, the BRICS summit kicks off in Russia, talking about the geopolitical challenges as well, with expansion of the group on the agenda. More on what the alliance is hoping to achieve next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the BRICS summit begins today in Russia. It's an opportunity for Moscow to show that it is still accepted, at least by many of the world's stage, despite Western sanctions. For more, let's bring in Bloomberg's Greg Sullivan. Greg, how important is hosting this meeting for Putin?
This is definitely an important moment for Putin. For one, it lets him demonstrate that he's still able to be a player on the international stage. Amid international sanctions imposed by the U.S. and its allies, they've largely sought to punish Putin and isolate him over his war in Ukraine. But he's here saying that, look, he's still around, he's a player and able to convene a lot of countries. In another way, it also lets him demonstrate that his message of reshaping the U.S.-led global order does have appeal for other countries outside of Russia. Finally, I would note that this is a chance for Putin to have meetings with key partners that are sometimes hard to pull off because of his travel limitations, given the arrest warrant from the ICC against him.
OK, so there's a very practical reason for hosting this meeting as well. So who's on the guest list then, Greg?
Well, what's interesting here is that this is the largest gathering of leaders in Russia since the start of the invasion of Ukraine. There's 32 world leaders and other leaders such as the UN Secretary General Antonio Guterres. There are leaders from China. Xi Jinping will be there. India's Narendra Modi. Also non-BRICS country leaders like Turkey's President Erdogan. Turkey is anxious to join the BRICS group, and Erdogan will be present there as well. One notable absent will be Brazil's President Lula. He sustained a head injury at home and had to cancel at the last minute before coming.
OK, to what extent, Greg, is this going to be a talking shop? To what extent is this just an attempt by Putin, again, to kind of bolster his international standing? Is there anything that's kind of really going to be hammered out at this meeting? And to what extent is there unanimity or at least agreement on some of these key issues for the BRICS nations?
Well, that's a key point that you bring up. In a lot of ways, this is a talking group for these countries to come together, but they do have diverse interests and diverse motivations. There are significant issues on the agenda, but it's not clear that they'll get unanimity. One of those is how to replace the U.S. dollar. Russia obviously is heavily sanctioned and is seeking to de-dollarize trade, is pushing to reduce the U.S. dollar in global currency reserves, but not all countries are on board with that. Some are skeptical of replacing the U.S. dollar as a reserve currency, even as they promote using national currencies in bilateral trade. Another issue is, of course, the expansion of BRICS. It expanded last year to 6 countries, but there's not agreement on whether it should be expanded moving forward, with some countries really in opposition to further expansion. So that could be one issue where you do see progress or you do see some consensus built, but issues of de-dollarization, alternative currencies, those seem a lot further off.
Yeah, that's really interesting. And I know China seems to have a slightly different approach to that versus what Putin and Moscow are hoping to achieve in terms of de-dollarization. It's interesting that former President Trump has made some comments on this recently as well. Greg, to what extent is the Russia-China relationship becoming further enmeshed? Or are those important divisions actually beneath the surface when it comes to that relationship between Beijing and Moscow?
Beijing has long sought to prop up Russia diplomatically and economically. And in fact, since the start of the invasion of the war in Ukraine, China has become Russia's most important partner. And this is another chance for Putin to meet with Xi Jinping in another setting and keep solidifying and entrenching that relationship. It's an important relationship. Trade has really grown between the two countries, and Putin seeks to continue that. China has shown that it is willing to prop up Moscow, willing to support it diplomatically. Xi Jinping will be present at the meeting, and that one-on-one will be an important one for Putin. There is no doubt there. So again, that's another reason why this summit is very important for Putin, a chance to meet with those leaders, especially Xi Jinping, who will be there.
OK, Bloomberg's Greg Sullivan on the latest in terms of that BRICS summit and the importance, of course, certainly for Putin's standing, that relationship between China and Russia as well. Greg, thank you very much indeed. Now to some other stories making news this Tuesday. China is on track to become the largest market, talking of that relationship, for Russia's pipeline gas this year. That's after Europe cut imports, of course, following the invasion of Ukraine by Russia. Bloomberg calculations indicate Russia exported 23 billion cubic meters of natural gas to China in the first 9 months of 2024. That is nearly 40% more than a year ago. And the UK is to loan Ukraine £2.3 billion to purchase military equipment paid for by profits generated by frozen Russian assets. The funding comes as part of a wider $50 billion package from G7 nations and the EU announced back in June. G7 allies have collectively frozen about $280 billion of Russian central bank assets, with the majority in Europe. And Italy's government has passed a new law to overcome a court ruling that blocked the Prime Minister's plan to send asylum seekers to Albania. 12 migrants were returned last week after a court said they originated from countries that couldn't be recognised as safe. Italy's cabinet has now approved a list of 19 so-called safe countries to allow the plan to continue. Now, later today, we're going to have a conversation with the ASML CEO. That's part of the Bloomberg Tech Conference. You can catch that at 9 a.m. UK time. So the CEO speaking for the first time, at least to TV, since that surprise cut to the outlook for the maker of lithography machines. And coming up, Europe's biggest software company sees cloud sales jump. We're going to speak to the SAP CFO, Dominik Asam. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian equities drop, with bonds extending a global sell-off as traders weigh a slower pace of US interest rate cuts. HSBC streamlines divisions and merges global businesses as the new CEO looks to rein in costs. We will bring you the details. Plus, clear skies for SAP as cloud revenues jump 25%. We're going to speak with the CFO of Europe's biggest software company in just a couple of minutes' time. Before we do that, let's check in on these markets. European futures pointing higher by around 0.2% after some modest losses yesterday. S&P futures currently lower by 0.2%. And FTSE 100 futures in similar territory, looking to lose around 19 points as we build up to the open, 8 a.m, of course, UK time. Nasdaq futures also pointing lower by 55 points. Let's flip the board and look cross-asset. Yes, the bond sell-off is there. It was pretty pronounced across US Treasuries yesterday with an 11 basis point move higher on the 10-year yield. Currently, the 10-year at 4.03, the 2-year, I should say, at 4.03, the 10-year at around 4.20. The Japanese yen, 150, currently largely unchanged, but there has been weakness, down about 5% in the last 30 days versus the US dollar. Brent trading lower by 0.4%, and gold up 0.5 at 2,732 per troy ounce. Let's get back to the earnings story then, because SAP's ADRs gained 3.5% post-market after the company's cloud revenue jumped 25% in the latest quarter as it beefs up its AI offerings. The company's chief financial officer was recently featured in our new CFO briefing newsletter devoted to corporate finance and what leaders need to know. Very pleased to say we are now joined by Dominik Asam, CFO of SAP. Dominik, thanks for your time this morning. So the 25% increase in terms of cloud revenue in the quarter. Give us some details in terms of the breakdown. How much of that came from existing customers versus new customers in the quarter?
We had actually, if you adjust for currency fluctuation, constant currency, cloud revenue growth of 27%, and by now have actually more cloud revenues in our total revenue base than any other source of revenue. So we can say after 4 years of heavy transformation towards the cloud, our strategy is paying off handsomely. If you look at the composition where that comes from, 84% of that cloud revenue is generated by what we call Cloud ERP Suite, which is the core cloud offering of SAP. That has actually growing 36% in constant currency terms. And that's the 11th quarter where that growth has exceeded the 30% growth mark. So that's really the core engine powering our growth. And what is even better, our so-called CCB, current cloud backlog, which is the 12 months ahead committed subscription revenue, is roaring at 29%. So there's also good visibility on the growth lying ahead.
OK, yes, that backlog in terms of orders is still there as you look out 12 months, as you say. In terms of that transition then for customers from the on-premises software solutions and the licensing to the cloud options that you're now offering them, does that stretch into 2025? How far does that go, Dominik? How far does that take you in terms of that tailwind for the business?
I mean, the runway is actually pretty long. We've just a quarter of our so-called maintenance base, i.e. the customers who are paying support fees on-prem, which is already paying both subscription and the maintenance. So there is still a huge remain to do. And even that kind of first quarter is not completed yet. There's still, even in that first quarter of transformed customers, a lot of runway. The legacy products they have been using are running out of mainstream maintenance in 2027 and then out of extended maintenance in 2030. So there's also some good momentum here to drive that conversion of the installed base on-prem into the cloud. And as I mentioned before, we've now passed more than 50% of the revenue base in the cloud.
OK, so further to run on that front. And clearly AI is a catalyst, and this is part of the programme that was initiated with some kind of determination, arguably, at the start of this year. Your CEO then saying yesterday on the call that about 30% of the sales, the cloud sales in the third quarter had some kind of AI business relation. To when does that get to 100? When does that get to 100%? When is this 100% of your clients wanting some of those AI solutions?
Well, we believe that this will gradually increase, of course. We are developing a lot of use cases. We said that we want to have 100 use cases on generative AI basically by the end of the year up and running. Now we achieved that ahead of time already now. So this is really gradually moving up. What is super important for our customers is that when they deploy AI, they want this to be very relevant to their businesses. It has to be reliable, based on solid data. No hallucinations should happen in the business, of course, and it has to be responsible. There's a lot of compliance and regulation around AI, and all these things have to be mastered. So our customers are keen on the type of processes we run end to end to get an off-the-shelf solution to empower them with more productivity, gain better insights, and so forth. So I'm convinced that this ratio will gradually move up.
Dominik, when it comes to the broader macroeconomic picture, Europe's economy broadly flatlining. Your other key market, the US, is growing, but less strongly than it has been. So the growth in the US is cooling, even if it's still there. Which parts of the client base are looking most challenged in terms of spending at this point?
Tom, I think it's relatively broad, and we see actually that macro headwind also in small parts of our business. We have a certain portion of our revenues which are more consumption-based. We call them transactional revenues, and this is, for instance, in travel bookings, when you hire a contingent workforce or temporary workers. We actually do see that the macro leaves its traces, but nevertheless, we are able, by virtue of the strong conversion of our installed base, by strong net new up and cross-sell with other customers, to sustain the 30% cloud ERP suite, because in that 36% cloud ERP suite growth, that transactional headwind is already digested.
When it comes to the market cap, look, the stock is up about 50%, a little over 50% year to date. So you can take something of a victory lap on that front. The market cap is up about 100 billion US or 100 billion euros since this time last year. It means that on your listing, you're bumping up against that 15% cap. Is Germany still a good place to be listed? That is a bit of a challenge for you at this point, is it not?
Well, you're right. We would like to see that kind of 15% cap disappear, because it constrains a little bit the demand in Germany. But we are really focusing on the large pools of capital available in the United States. There's still a lot of runway, a lot of room for us to grow and attract new investors. We would like not to exit Germany, but to the contrary, attract capital into Germany. And on that front, I have to agree, the 15% cap in the DAX is not very helpful. There's other regulation in Europe, for instance, on so-called UCITS funds, which are actively managed. Many of them are actively managed, which are also a little bit constraining. And we are currently trying to convince those who run these indices, those in charge of legislation, to reconsider that cap.
OK, so you'd like to see that cap reconsidered. You say you want to attract capital into Germany, but is one option potentially, if that cap is not removed, to consider removing the listing from Germany and listing somewhere else as your primary destination?
As I said, that's not the plan as we speak. We'd rather attract capital into Germany than exiting Germany on the listing.
OK. Talk to us about, so in the US, it's your second largest market. It's a key market for you, clearly. There is this DOJ investigation right now into allegations of price fixing. In terms of what that's doing to client demand in the US, particularly amongst government agencies, is that having an impact at all?
Yeah. First of all, US is actually our largest market. If you look at the nations we serve, it's almost a third of our revenues. Indeed, it's very important. Now, there's actually no new news on that famous Carahsoft investigation. For many years, like many other tech companies, we have been using Carahsoft as a reseller to institutional customers in the United States. There was a civil investigation launched in August 2022. We have since then cooperated with that. And now that FBI search that has happened on Carahsoft more recently in September of this year, as confirmed by Carahsoft in writing, is unrelated, completely unrelated to that civil investigation we have been cooperating with since 2022, which, by the way, dates back to incidents as late as 2014.
OK, in terms of personnel at the business, there's been some changes, of course. You don't have a sales officer right now, a chief revenue officer at SAP. When do you expect to have someone filling that role, and what will their key priorities be, do you think?
Well, I'm sure Christian Klein would disagree, because he's now in charge of that activity and really driving the transformation in the go-to-market. Honestly, we have been criticized by investors for an extremely high selling expense ratio. It was 27% selling expenses to revenues last year. And now there needs to be transformation to really make sure that we also get more efficient, get more output, more bang for the buck on our investment in go-to-market. And Christian Klein is driving that. And yes, of course, we are going to recruit a successor, but that's the job of the supervisory board. So you would need to interview them on where that process stands.
Okay. Dominik, before we let you go, you're embedding AI into the business as well as selling it to your clients. Can you put a dollar number on the efficiencies that you've seen so far as a result of that push?
Well, it's not something you can kind of dissect out of the business. We see in various areas of the company significant improvements in productivity. Just giving you one example, we are going to double the offers we are going to issue to customers over the next 3 years. And we really want to achieve that without adding any new personnel. So that gives you some feeling about the type of productivity gains you can gather. There's also our Copilot Joule, which of course makes the interaction with our tool much faster, much easier, much more intuitive. And there's so many fronts. I mentioned 100 use cases by now released where we can add that productivity. Or take coding. There is also a proprietary SAP language called ABAP, where coding becomes much easier with AI, with generative AI.
Okay, SAP CFO Dominik Asam, we appreciate your time this morning. Thank you very much indeed on the back of those results. Our newsletter, by the way, CFO Briefing, is a weekly look at what finance leaders need to know, available to Bloomberg subscribers. Now, later today, we're going to have a conversation with the ASML CEO. That's as part of the Bloomberg Tech Conference. You absolutely should tune in for that interview. That's at 9 a.m. UK time. To other stories now. Maersk has raised its full-year guidance for a fourth time in less than 6 months as Red Sea attacks boosted freight rates. The Copenhagen-based company sees underlying EBITDA of between $11 and $11.5 billion this year. That's compared with the previous forecast of up to $11 billion. And car sales in Europe fell in September in the first consecutive monthly decline in more than 2 years. That's as the region's economy continued to stagnate and consumers trimmed spending. New car registrations fell 4.2% compared to a year ago to 1.12 million units. Stellantis posted one of the biggest drops, with registrations plummeting 26% in the region. Now, HSBC says it will merge two of its largest businesses outside the UK and Hong Kong and restructure regionally. CEO George El-Hedary is looking to rein in costs against a backdrop of falling interest rates. Let's bring in Bloomberg's Russell Ward for the details. Russell, let's start with the organisational changes at HSBC. What are the key points that have come out this morning?
Hi, Tom. Yeah, big changes at HSBC. The organisational changes are that they are streamlining their businesses into four main businesses. That is Hong Kong, UK, corporate and institutional banking, which is merging two big businesses there, and then creating a new international wealth and premier banking team. So obviously the Hong Kong and UK businesses, no surprise there, reflecting the importance of the two big home markets. But more interestingly, the combination of the corporate and institutional banking team that's been reported earlier, but that's something that has been quite resisted by leadership in the past. So that's one interesting aspect of this change. And the other one is the creation of this new wealth division. Obviously, that's reflecting the growing importance of wealth management for HSB and for big global banks. And on top of that, there's also been some regional changes. So the bank is basically splitting its geographical businesses down into two lines. This is the Eastern Markets division, which is Asia Pacific and the Middle East, and then Western Markets, which comprises the UK, Europe, and the Americas. The upshot of all of this, of course, is to avoid duplication, to simplify the organisation, and to reduce costs. This is against the backdrop, of course, of the bank facing lower interest rates, a squeeze on lending income, and George El-Hedary has wasted no time since he became CEO last month to make cost savings a priority. He's already, we've reported recently that he's already been cutting event spending and cutting travel spending at HSBC, and so on top of that are these sweeping changes.
And Russell, some interesting changes in terms of personnel as well. The appointment of Pam Kaur as CFO of HSBC. What do we know about Pam's biography?
Right, so Pam Kaur, she will be the first woman to be CFO at HSBC in its 159-year history. So that's a big milestone. She joined the bank in about 10 years ago. Her background is in accounting. She was head of the audit office. She's currently head of risk and compliance. And so she's going to be now tasked with this immense job of cutting costs. Remember, the CFO position is a very important position at HSBC. Al Hedari was the previous CFO, of course, and predecessors like you and Stevenson, they were renowned for big, aggressive cost-cut drives. So we'll have to just see if Pang Kaur can continue those efforts.
OK, really important update. We appreciate it. Bloomberg's Russell Ward on the changes at HSBC. Thank you very much indeed. Coming up, Apollo's chief economist says there is a growing chance the Fed actually stands pat next November and does nothing. We discuss that view with my next guest. That's coming up in the next couple of minutes. How to position as the bond market sell-off continues. Stay with us. This is Bloomberg. Welcome back. Apollo's chief economist, Torsten Slok, sees a rising chance that the Fed will leave rates unchanged as the US economy grows, unchanged in November, that is. It's a view that seems to be gaining traction on Wall Street in some quarters as data suggests an economy flirting with a no-landing scenario. Joining me now, very pleased to say, is Isabel Albarran, the CIO of Close Brothers Asset Management. Isabel, do we need to be pricing in a pause from the Fed in November?
Well, I think the exact timing of a sort of pause is open to debate. But I think the key point, there's some real truth here in that the market has massively been overpricing the amount of cutting that was likely. And now pricing is looking much more realistic. November, December, I don't think it matters a huge amount. I think the key point is we're now seeing more rational price expectations this year and even going into next year. But I think it's next year and looking at where rates trough, where there's still some repricing that needs to take place insofar as I think, a little bit less from the Fed because of that economic strength that you mentioned.
Does that suggest you think that the bond sell-off has further to go? Are you looking at 5% on the 10-year, for example, in the next 6 months? Does that seem a rational move?
I'm not sure about exact levels, but thinking about kind of the direction of things, certainly I would expect to see the kind of, that trough level begin to creep a little bit higher. What
are you seeing in terms of the earnings story? We had the outlook cut from ASML on the tech front, at least in the semi-space. The hardware supplier, of course, the bank's doing quite well, though, stateside. We've got some European banks reporting this week. What is your read-through on European earnings and what's looking mispriced?
I think it's really been a tale of kind of two halves there. So on the one hand, you mentioned financials, a real bright spot in terms of where analysts are repricing their expectations. Revisions have been much more constructive. Looking more broadly, really not such a fantastic earnings season in terms of where revisions are going. So with that in mind, I think potentially if we see that continue, we could be at a place where some of those more cyclical areas of the market are actually looking a bit more attractive because expectations are just more rational, could be positive. I think we probably need to wait until next year, clearing some of the volatility, some of the kind of key events for upset to find a better entry point to those stocks.
You talk of volatility, you talk of key events, and you, of course, think of the US elections. What is the best market outcome from the US election?
So I think the good news is quite a lot of outcomes could be pretty constructive for markets for a couple of reasons. First of all, we're going to be entering a less regulatory type period. Either outcome, we're seeing that begin to ease. I think secondarily, because we still have a huge amount of fiscal stimulus unspent, there's a really good chance that provides a bit of a tailwind for the US economy. And thirdly, I still think there's a relatively high chance we see a divided House and Senate. So that provides a bit of a check and a balance to whatever the incoming president decides to do. In terms of the most market favourable outcome, I think if you take a really long-term perspective, it is a Democratic win, but with a divided Senate and House. And that's because if we think about what happens if we see the Democrats lose, we're probably seeing the next candidate being more to the left. If we see Donald Trump lose, you probably see a more centrist candidate. And I think markets are sort of taking that into account.
Before we let you go, how are you thinking about positioning in the UK in the lead up to that budget at the end of this month?
There's a lot going on in terms of market speculation, vis-a-vis the budget. I think it's worth thinking about it as two halves. One half is about filling this 40 billion black hole and about raising taxation. We're really hoping that obviously the Treasury try and target that in a way that's not going to harm business or consumption spending too much. The other half is, there's going to be some changes to the borrowing rules. We're going to see more borrowing. But I think the market will probably tolerate that because the focus there is going to be on increasing an investment. And that obviously has GDP implications.
OK, that's really important, isn't it, in terms of the signalling and whether the market can absorb that additional debt load that could come through on the back of this budget. Really interesting views, important and valuable views for us. Isabel, thank you very much indeed for joining us around the studio bright and early this Tuesday morning. Isabel Albarran, Investment Officer at Close Brothers Asset Management. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. So as markets contemplate a less dovish Federal Reserve, fewer cuts, is the path for least resistance for the US dollar just higher from here? Certainly that is the view of Markets One from our M Live team, saying that actually positioning into the US dollar upside is still not looking stretched. Here's a comparison in terms of where the dollar has landed versus Citi's view in terms of economic surprise index that's come out of Citi. The highest level since April. You can see that move higher. So again, the focus on the strength of the US economy and a Fed that may not be cutting as much as some of these markets think, maybe that's giving further upside for the US dollar with all the global ramifications, of course, of that. Let's flip the board and have a look at an interesting and intriguing call from Goldman Sachs and their strategists there. Here's the outperformance of the S&P over recent years. On an annualized basis over the last decade, the S&P has performed about 13%, the gains of about 13% on an annualized basis. Goldman Sachs says going forward in the next decade, you're looking more like 3% because of competition from other asset classes, including US Treasuries. Just one to reflect on going forward. At 3 p.m. UK time, by the way, we're going to have an exclusive interview with the ECB President Christine Lagarde. That's 3 p.m. UK time. Before that, we're also going to be hearing from the ASML CEO, Christophe Fouquet, from the Bloomberg Tech Conference. You can catch that exclusive conversation just after 9 a.m. UK time. The opening trade, though, is up next. Stay with us. This is Bloomberg.